This is a podcast from the Business Times.
Good evening. It's Tuesday, July 14th, 2026. Here's your market-focused daily closing bell update by the Business Times. Asian shares closed mostly higher today after a volatile trading session, as investors await U.S. Federal Reserve Chair Kevin Warsh's testimony to Congress today. Amid mounting geopolitical tensions, sentiment was further rattled by a third straight night of U.S. military strikes on Iran, and the speculation that Washington could impose a 20% levy on cargo ships transiting the Strait of Hormuz, raising concerns over global trade and energy supplies. Oil prices climbed almost 3% today, reaching its highest level in 4 weeks following the temporary ceasefire agreement. After the U.S. reinstated its naval blockade of Iran, while both countries intensified attacks in the Strait of Hormuz, fueling concerns over disruptions to global energy supplies. Brent crude futures rose 2.3% to $85.20 a barrel, while the U.S. West Texas Intermediate gained 2.4% to $80.05 a barrel. In Asian markets, MSCI's broadest index of Asia-Pacific shares outside Japan was up 0.2%, after a rebound in South Korean shares and gains in Chinese equities offset declines in Taiwan. The South Korean Kospi benchmark index closed 0.7% higher, with memory chip giant SK Hynix shares reversing early declines and climbed as much as 4.9% following its sharp sell-off yesterday in the wake of its NASDAQ debut last week. The Kospi remains among the world's top-performing equity markets this year. Taiwan's TAIEX briefly slipped to a one-month low today and closed 1.42% lower. Investors are looking ahead to TSMC's earnings this Thursday, with the chipmaker widely expected to post a fifth straight quarter of record profits. Japan Nikkei rose 0.8% after Finance Minister Satsuki Katayama said the country could review the investment strategy of the Government Pension Investment Fund, GPIF, should market conditions deteriorate significantly, although she stopped short of providing further details. Mainland China's benchmark index climbed 2.15% and closed at 4,796. After June, export growth accelerated to its strongest pace since 2021. Driven by AI-related demand and a surge in shipments ahead of tariff measures. In Hong Kong, the Hang Seng Index closed 0.52% higher, led by advances in basic materials and energy stocks. Elsewhere around the world, European stocks opened lower today as rising oil prices fueled global inflation concerns. The pan-region Euro Stoxx 600 slipped 0.45%, while London's FTSE 100 and German DAX edged down 0.15% and 0.45% respectively. U.S. futures point to a mixed start to the day, as Dow Jones Industrial Average futures pointed down 0.2%, while NASDAQ 100 futures are up 0.37%. Finally, moving away from stocks, global government bond yields edged higher today as fears of higher inflation expectations grew. U.S. 10-year Treasury yields rose to 4.634%, while the 10-year German Bund yields hit an 8-week high. In Asia, 10-year yields in major markets, apart from Japan, also rose today. That's it for today. For more business news and market updates, visit bt.sg. And Lens on Daily for the latest tomorrow at 10 a.m.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.